So in today's episode, we're gonna talk about something you heard about a lot, and it's called buy cheap on a discount and sell on it's expensive. And this one, how do you apply it to the chart? So as you can see the chart, like let's say for gold, it looks like it's in the middle of nowhere, but you don't need to look at the whole price like for many months back and years back. How you look at it is from the least, like what you can see in front of you basically in the chart. So the last high or the last low, is this what you look at when it comes to deciding where are the areas which are at a discount or are at like premium? And we use the Fibonacci tools to decide that one. So basically anything above the 50%, you can, let's say, sell. Below the 50%, you can buy. This is how we're gonna look at some examples in the chart where you use the Fibonacci tools together with the demand and the supply zones and the things we discussed in previous lessons with the market structure and everything. If you incorporate all of these together, you're gonna have like almost like unbeatable strategy which you can take like as entries, like having the imbalances in place, having the fair value gap, the order block, all of these together with the Fibonacci tools as extra confluence, you might have a very like strong strategy and a bulletproof which you can have at, let's say, 70-80% winning rate. So looking at gold, for example, here, for example, the least low is this one, and the highest point is this one. This is on the 4-hour time frame. So you don't need to go like far looking back like at everything, but you look at what is in front of you. And this is especially like in the 4 hours, this is a massive zone to cover. Like just this move from here to here, this is already like quite a big move. So using the Fibonacci level, you incorporating also other elements where you have like support become resistance, resistance become support, or what we call it RBS or SBR, the trend lines and all of these things together. And you merge all of these elements together to have a proper strategy for entry and exit as well. So taking the last swing low, this is where you have the rejection. So when do you draw really the Fibonacci tool? You draw the Fibonacci tool only after you see some rejection. So you take it from swing low to swing high if you are looking for opportunities to enter for uptrend, and the other way for downtrend, like you draw from the high to the low when you look for downtrend entries. So in this example, like here, this is a fresh example from the least price action movement, let's say from last week. And you can see that the price, if we take back this one, let's say the price is just here, and then you see what happened here. It started rejecting here. So now the price clearly it's on an uptrend because it broke the last high low, and it created a change of character with break of structure. Like multiple times it broke the last movement. So you can see there it broke let's say this one, and it broke this one, and those are the swing high from the previous downtrend. So it broke those two areas, which created change of character, break of structure. It means we are on an upward movement. So now I draw my Fibonacci tool from the swing low where the rejection happened to the swing high, looking for entries. So where do we enter? We enter at the 50% or the golden zone, which is between the 50% and 0.618 on the Fibonacci tool. Basically this area. And guess what? In this area as well, what do you see? You see also um, uh, RBS, where resistance become support as well. So if you draw like the rectangle here in this area, okay, especially if you take the 50% here, and if you go back a little bit, you're gonna notice this is a strong area. Why? Even before, this is a strong area where it was support become resistance, resistance become support. So this is what is called like key level, because the price respect this zone when it comes to this area. So if you play it out here, like you see here, it went exactly like in this zone, this area. And then what? If you take entry by here, as you can see, can collect few points here, went up, came down to the same zone, still respecting the zone, and still went up and did how much? This move from here, this entry, which is was 2608, all the way to 2724, or even if you take it from 2620, let's say your entry was in this area. If you refine your entry with the 15-minute time frame or the 1 hour, and let's say you enter around this zone, which is 2620, and you hold your trade all the way to 2725, you're talking about something around 1000 pips basically. That's quite something. And you look at how it respected the previous levels as well. So for the downtrend example, let's replay to here. Okay. And what do we see here? What do we see here? We see that the price came down. It broke the last high low, which created change of character in this area. And then what do we expect? We have a strong movement happen here. Okay. We expect that such a move, it will retrace. That's what's called Fibonacci retracement, because there are zones where the price going to retrace from. So we draw our tool. We draw our tool here from the top to the rejection point. This is where we had the rejection. This is where we had the rejection. Since it has changed character, so we look now for sell opportunities. We're not looking for buys anymore. But look here also on the left. What do we see? We see this zone around the golden zone, which is like around the golden zone. The price always gonna retest the breakout area. So where is the breakout? It happened here. Okay. So what I'm gonna do, I'm gonna draw a rectangle between the 50% and the breakout line. You can say like in centimeters, millimeters, like exactly it's there, exactly where you are drawing. So this is an extra confluence where the price got into a key level where it was what? It was a support. Now it's becoming a resistance area. Let's say you take your entry here from this zone, which is 2710, and you sell. How far the price has traveled? How far the price was traveled? To the last swing low. Let's play out this one. And boom. Why why do we expect that the price will travel even far more? The price always attracted to liquidity. So it took the last rejection point, the last swing low here, and the next one, and continued down all the way to the lowest point in the chart. After that, it got rejected and changed direction and went up again. So this is how you use the Fibonacci tools to find a great entry with combination of demand supply zone, combination of RBS and SBR, which is resistance becoming support or support becoming resistance. This is amazing strategy using the price action and using basically SMC concept, and finding like the block orders, finding a proper entries after retracement. And this is basically like the whole thing about buying and selling in the discount zone and the premium zone.